Bitcoin, is the bear market over and done with? Has Bitcoin found its bottom and it's time for accumulation mode to go into overdrive? These questions, or ones like them, are on the top of every crypto investor's mind. Well, it's time to start getting them answered, because decisions near the bottom of bear markets can make or break a portfolio. So are you gonna make it or are you gonna break it? Because it's time for Chico Crypto. Well, there is no doubting we have been in the midst of a rally. Checking out the Bitcoin price after the capitulation dump down to 17.5K, we can see the price has stutter-stepped its way back to 25K with a series of higher highs and higher lows. So what's the deal? Are we breaking into accumulation before the bull, or is this just a standard bear market rally? Well, let's take a wholesome view and look at both sides of the coin. So to begin, have we moved out of the bear and into the Bitcoin accumulation zone? Well, there are some charts and stats out there which are hopeful that this is the case. Comparing the 2018-2019 downturn, calm before the storm, and then the final capitulation and bottom with what has happened in this cycle, you can see the two are very similar. Now, a titan of crypto on Twitter dives deeper into this, including the previous cycles and a certain indicator. They said, Bitcoin bottom confirmed. Historically, it took 8 weeks on average after a bottom was in for log MACD to cross bullish. If we consider June's low as the bottom, it's been 8 weeks since then, and weekly log MACD is about to cross bullish once again. God damn, Tyler, you showed me a couple charts and a technical indicator. Bull market is back on. I know, this isn't foolproof evidence. We're out of the bear woods, but there are a few more indicators flashing, like the Puel multiple. This indicator explores Bitcoin market cycles from a mining revenue perspective, as the multiple is calculated by dividing the daily issuance value of Bitcoins in USD by the 365-day moving average of daily issuance value. Looking at the multiple, when it gets high and into the red, this indicates that current miner profitability is high compared to the yearly average. As such, there is incentives for miners to liquidate their treasuries, and sell pressure should be coming. As we can see, high values and getting into or near the red has also signaled the top for every Bitcoin cycle. But the opposite is true for this multiple. Low values indicate that current miner profitability is low compared to the yearly average. Income stress may become a factor for some miners, and they may need to start reducing hash power by switching off their rigs. This increases the hash share of the remaining miners who can sell fewer coins. Checking out when this indicator has gotten into the green oversold area, historically it is followed by a few months of consolidation. In previous hits of this green area, Bitcoin has never fallen back into the oversold area within 6 months of officially breaking out of it. So do we have 6 months of breakout bullish coming? Well, what about the Guppy Multiple Moving Average, GMMA? This is a technical indicator that aims to anticipate a potential breakout in the price of an asset. The term gets its name from Daryl Guppy, an Australian financial columnist and book author who developed the concept in his book, Trading Tactics. The GMMA is a trend-following technique composed of 12 EMAs, or exponential moving averages. The 12 EMAs are separated into two groups, a short-term group of EMAs and a long-term group of EMAs. Short-term EMAs are usually green, while long-term EMAs are usually red. The crossover of the short and long-term EMAs represent trend reversals. If the short term crosses above the long term, then a bullish reversal has occurred. Conversely, if the short-term MAs cross below the longer-term ones, then a bearish reversal is occurring. Well, looking at this chart, we can see in this cycle the red crossed the green, indicating that we are going into a bearish reversal, which happened. And the green hasn't crossed back over the red since. Wait, isn't that bearish? That means the trend is still bear? Well, yes it does, but then it doesn't. Zooming out and adding their tweet, a Mustache El Crypto Prof on Twitter pointed this out. He said, Bitcoin bottom indicator. Every time green GMMA, guppy multiple moving average, crossed red GMMA, and BTC held the 200 weekly moving average, the bottom was in for BTC, and the price went parabolic thereafter. This happened in 2015, 2019, 2020, and 2022. But technical indicators aren't the only indicators that things are starting to flip bullish for Bitcoin. On-chain indicators are showing similar things, like Bitcoin has officially crossed 1 billion total addresses used. And it seems people around the world are using this downturn to accumulate. The number of people who own a full Bitcoin or more just reached over 1 million people. But remember, I said we'll look at both sides of the coin. We just looked at the indicators for a bull. Now let's switch to the bear, why it's possible we may go back down. But before we get into that, it's time for a sponsored segment of this video, brought to you by the team at Rubic. And like always, the details of our agreement can be found in the description. During the summer 2020 DeFi boom and after, countless projects and tokens entered the marketplace. And it's fair to say the current bear market has not been kind to many of these projects, forcing many of them to fold. The same cannot be said about Rubic Exchange, a project we've featured multiple times on the channel. They just continue developing new features, expanding to more blockchains, pumping out more partnerships, adding more DEXs and bridges, and most impressively, steadily increasing their user base and total volume exchanged. Rubic is a one-click cross-chain aggregator, allowing users to swap over 15,000 tokens on or between 14 different blockchains. That's on-chain or cross-chain swaps between 70 bridges and DEXs. But Rubic isn't a bridge. Rupert is the aggregator of aggregators, able to swap any token on any chain for any other token on any other chain, network to network, all in just one transaction with one click of the button. To make it more clear, this is both the most user-friendly DEX aggregator on the market and the most extensive, offering more token options than anyone else. I mean, you might as well go to the Rubic.exchange website right now and just bookmark their site. Go ahead, you can do it. There isn't really a better solution on the market. Just look at how user-friendly this interface is and how easy it is to swap a token cross-chain, fully automated with no extra steps. Here I'll choose some XI tokens on the Ethereum network and exchange it for Mover on the Moon River network. After entering the amount of tokens to trade, I simply click swap. Then after a minute, bada bing, bada boom. I just traded 2 tokens between 2 chains in one painless transaction. Rubic's tools for crypto projects, like their fully customizable SDK and easy to install website widgets, have changed the game for other Web3 projects looking to add value and simplicity for their users, helping them become fully interoperable. Within minutes, other projects can integrate Rubic's aggregator cross-chain DEX directly to their own website, providing all the features and benefits Rubic has to offer. And it's become quite a popular tool, as over 80 crypto projects have fully integrated Rubic onto their own sites. Additionally, Rubic recently announced their new NFT widget MVP. This widget is a simple and ready-to-use NFT cross-chain trading tool that provides platforms and users with a seamless and cost-efficient way to purchase an NFT using funds on any chain. Rubic is constantly innovating and evolving, and they are genuine pioneers in this space. Their consistent user-based growth is a testament to their viability in this marketplace. And after using their cross-chain aggregator, the ease and simplicity of use speaks for itself. So be on the lookout for the launch of some new staking features. And of course, keep up to date with their constantly growing list of new bridges and blockchains added to their ecosystem. The Rubic team has great communication with their community and constantly share updates. Get plugged in. Links for their Twitter, Telegram, along with their beautiful cross-chain aggregator can be found in the description. Now back to the bear case for Bitcoin. Everyone should know Bitcoin moves in cycles, bull cycles and bear cycle drawdowns. And if we have already hit the bottom back on June 18th, this would be the shortest bear market in the history of Bitcoin. From this chart, we can see historical Bitcoin bear market drawdowns. After the first halving cycle, the green line, we can see it took 411 days for the bottom to come, and it was a drawdown of 85%. After the second halving cycle, the blue line, we can see it took less time, only 364 days to hit the bottom, but a similar drawdown of 84%. For this cycle, June 18th was the bottom at about 17.5K, then this would have been only 221 days to the bottom, with a drawdown of only 74%. Now the difference between the lengths of the first two cycles, 411 days first, 364 days second, was just 11.5%. The difference between the lengths of the second and this cycle, 364 days second and 221 this one, is 42%. Now, I know bear markets are getting shorter, but a 42% difference this time compared with just 11.5% the two cycles before is major. And speaking about previous cycles, Bitcoin dominance has been getting crushed lately, down to below 40%. This would be the first cycle in which Bitcoin dominance wasn't pumping towards the end of the bear. In past cycles, it has reached over 70% before we entered another explosive alt season. So what could put an end to this rally? What could be the catalyst putting an end to this bear market rally? People need to realize this: bear market rallies will go higher than anyone thinks, to the point where people start thinking that the bear market is over. In terms of a catalyst, we have to speak about those Mt. Gox coins getting released at the end of the month. Now, with the Mt. Gox hack, which happened all the way back in 2013, they recovered 200,000 Bitcoin back to the users. 24,000 of those coins were sold in 2017. At the end of this month, 137,000 will return to the users, worth over $3 billion. The average buy-in price from the users, just $300 per coin. At today's prices, users are up 6,500%. They were forced to hodl, and now they have the ability to dump those BTC. I think some of them, upwards of 30 to 50% of users, will take advantage of the gains and dump the BTC. For a lot of them, that is life-changing money they haven't had access to for almost a decade. Many are going to want to change their life, and that is going to cause a bunch of unwanted sell pressure out of nowhere. So my friends, I wish I could be the one who tells you what's going to happen in the short term, but I am a long-term investor, and these short-term movements won't matter in the big scheme of things. This could be just a bear market rally, but we are near the bottom, and accumulation during these times is all I'm thinking about. Cheers, viewers. I'll see you next time.